Under this new regime, there are a lot of things you need to take into account as a business owner. We're going to give you practical steps on what you need to do to organize yourself as a business owner. Hey guys, welcome to another edition of our video series. Well, as you may know, the Nigerian tax laws have changed, and under this new regime, there are a lot of things you need to take into account as a business owner. So in this video, we're going to give you practical steps on what you need to do to organize yourself as a business owner, whether you're a small business owner, a medium-sized business owner, or a large business owner under this new regime. Step one, you need to register for taxes. What's registration? Registering for taxes is just like giving your business a certificate of recognition by the government from a tax perspective. So the same way you go to the CAC and you get a certificate of incorporation, that same way you need to get some kind of identification with the tax authorities. And you know what the good thing is? The tax laws harmonized everything. Before, you needed to get a tax identification number from the FIRS, which is now the Nigerian Revenue Service, and then you needed to get a tax ID or a payer ID from various state authorities for state taxes. But now, under the new law, everything has been harmonized. So you no longer have to get a tax ID, a TIN rather, from the FIRS or the NRS or a state payer ID. Now you get one tax ID for every tax obligation, whether at the federal level or at the state level. How do you get your tax ID? It's very simple. Just go to taxid.nrs.gov.ng. If you are a company or a business name or a non-profit, select company, corporate, and enter your CAC registration number. And then when you do that, it will retrieve your tax ID for you. And that's what you would use whenever you're asked for your tax ID. If you're an individual, you can get your tax ID the same way, but you select individual and they will ask for your NIN. And once you provide your NIN, you would get your tax ID. So that's the first step. There's a penalty for not getting a tax ID. It's 50,000 naira under the law, but you won't have to suffer that penalty anymore because the law has now, the government rather has harmonized everything. You no longer need to necessarily register. They already give you a tax ID by virtue of your registration details. So that step is simple. All you need to do is just retrieve it. And if you do not have a tax ID, there are a number of things you will no longer be able to do. First, you won't be able to operate your bank account anymore. That's your corporate bank account. You won't be able to register a new bank account or open a new bank account. You won't be able to do contracts with government agencies. You won't be able to do contracts or execute contracts with certain kinds of corporate entities that will insist that they see your tax ID. So retrieve your tax ID today, and it's free. You don't need to pay to get a tax ID. Now, the second step that you need to take actually is that you need to start to keep your books. A lot of businesses do not keep books, and I can understand why. I mean, it can be complicated. In some sense, you need to get an accounting software. Some people think they need to get an accountant that would be recording their transactions, the debits, the credits, and all of that. But there is a legal obligation for every business. Whether you're a big business, you're a small business, whether you're a spare parts owner in Alaba or you are a big tech guy in Victoria Island, you need books, keep records of your transactions. And you might ask, how do I do that? It can sound complicated, but we at TaxStream are building, and we have actually built a product that would help make your accounting very easy and your tax compliance. So we connect to your bank account and we pull your transaction details, and we use those transaction details to prepare your account for you and also handle your tax computation. So it is that easy. You don't need to worry too much about how to deal with that issue. We are already handling that problem for you. All you need to do is subscribe to the service. But remember, it is mandatory for every business to keep their accounts. Whether you want to keep it manually by recording it in your book, or you want to keep it digitally, the important thing is you must keep your books, and your books must be accurate. There's a penalty for not keeping accurate books. If you are hiding some of your transactions, you're not keeping everything recorded, the government, when they come for you, you will pay penalties. And there is a 50,000 naira penalty for not keeping your books. And the law gives the government the right to come and ask you to present your books when they want to assess you for tax. So if they come and they ask you, bring your books, and you don't have records, you're going to suffer a penalty. So it's important that you take bookkeeping very seriously, and TaxStream can handle that for you. Now, the next thing that you need to do is that you need to start learning how to issue invoices for your business. That is part of the record we are talking about. Now, every business has an obligation to keep records. I have said that. But what are those records? Beyond your bank statements, one of the things you also need to keep are your your invoices to your clients to show the sales you made. And there is a format that the tax invoice needs to follow. Every tax invoice that you issue as a business needs to include your tax ID. Remember, step one, tax ID. You must add your tax ID. You need to include the dates of the transaction. You need to include the details of the person, your customer that you're issuing the invoice to. You need to include the address of that customer because it's important for withholding tax remittance purposes. You need to disclose the full details of the transaction that you're dealing with, you're supplying, whether it's goods or services. You need to give full details. And if you're eligible to charge VAT, you need to include the VAT rate and the VAT amount. Those are very important details that every tax invoice must contain. And you ask yourself, it's very hectic. How do I prepare an invoice? That's where TaxStream also comes in. TaxStream helps you sort out these issues. Now, what's the next thing? We've spoken about 3 steps now. The fourth step that you need to follow as a business is that you need to look out for your monthly compliance obligation. Every business has at least 2 obligations on a monthly basis, and that is VAT, value added tax, remittance, and filing, withholding tax, remittance, and filing. Now, let me explain VAT. VAT is the tax you charge when you supply goods or services to your customers. Now, under the new tax laws, small businesses are exempted from charging VAT. That is the general rule. So for you to qualify as a small business, your revenue, that means your total sales in a year, your revenue in that year has to be less than between 100 million or less. So if you don't make up to 100 million in a year or more than 100 million in a year, you don't have an obligation to charge VAT. But if you're a professional services provider, that means you're an expert in a particular field. Either you are a lawyer or a law firm, you're an accountant, a doctor, a pharmacist, and there's an expertise. You're a consultant, you are a software engineer. Anything that requires a special skill to provide that service, you no longer qualify as a small business, regardless of your turnover, your sales. Even if your turnover is less than 100 million, as long as you are providing professional services, you are not a small company. That means you need to charge VAT. Right. So what happens when you charge VAT? You need to collect the VAT from your customers. So when you issue the invoice to your customers, you add VAT. And when they pay the invoice to you, they pay you the invoice plus the VAT you charged. Now, that VAT is not your money. It is the government's money, and you have an obligation to remit that money to the government every 21st day of the month. So for sales you made in January 2026, you need to file the VAT returns with the NRS, the Nigeria Revenue Service, by 21st of February 2026, and then pay the VAT you collected. Now, the VAT you pay to the government is something called the net VAT. So that means you would aggregate the VAT you suffered from your purchases, the things you bought from your vendors, and you paid VAT to them. You need to aggregate that. There is also the VAT called output VAT from the sales you made to your customers. You need to aggregate that as well. So you now subtract the VAT you suffered from the purchases you made. It could be raw materials you bought for production. It could be goods you bought to resell. It could be services. You paid a consultant to do something for you and they charged you VAT and you paid. It could be assets. You bought a machine for your company and you paid VAT when you were buying the machine. All of those VATs, you can deduct them from the VAT you collect when you sell your product or when you provide your services. So it is the difference between the output VAT and the input VAT that you pay to the government on the 21st day of every month. Now, it sounds very complicated. How do I go about recording input VAT, output VAT? We have built a simple solution that makes this very seamless for you. And that product is called TaxStream. And I'm the co-founder and CEO of that company. And we are solving this problem in the most amazing way possible. So don't worry about it. You will see how it works eventually. Now, after you've charged the VAT, there's another thing you need to comply with, and it's called withholding tax. Now, bear in mind that if you don't charge, go back to the VAT. If you don't charge VAT, there are penalties for not charging VAT, penalties for not remitting the VAT. For not remitting VAT and filing your VAT returns, the penalty is 100,000 naira in the first month and 50,000 naira every other month when you have not filed your return. So you see, For not complying, you can be incurring a lot of penalties. And, that is not something we want for you as a business. So, which is why we built the solution we built. Now, the next thing I was talking about is withholding tax. You need to understand how withholding tax works. Now, withholding tax is the tax you deduct when you're paying your vendors. So your vendors will issue an invoice to you and tell you, oh, pay me 10 million. The law says deduct withholding tax from the invoice that your vendors have sent to you and remit that withholding tax you've deducted to the tax authority for that vendor using the tax ID for the vendor. Now, the law is basically appointing you, the business owner, as an agent for the government to collect taxes at source. Now, I will do a broader video on withholding tax and VAT, but the important thing you need to notice is that if you are a small company or a small business, which is a business that earns less than 100 million, the law simply says that you don't have an obligation to deduct withholding tax if the invoice that you are paying is less than 2 million. So, and if the vendor has tax ID on the invoice. So that means as a small business owner, if you look at the invoice that you are meant to pay and the amount is less than 2 million, and that your vendor has a tax ID, you do not need to deduct withholding tax. But if the amount on the invoice is more than 2 million, it means that as a business owner, you need to deduct that withholding tax. And the interesting part, you still need to remit the withholding tax to the government. And it can differ depending on whether your vendor is a company or a business name. We'll explain further in another video. So watch out for that other video. I'm going to go deeply and extensively into what this means. There is also a penalty when you fail to deduct withholding tax. The law says you pay that withholding tax you refuse to deduct plus 40% of the tax you refuse to deduct if you had an obligation to deduct. So you see, your penalties are piling up if you're not complying. If you also deduct the money and you do not pay, the law is you would pay that money you deducted plus interest penalty at 10% of the money you deducted and did not remit to the government, plus interest at CBN monetary policy rate. So you see, the problems keep compounding. But again, TaxStream makes this process very simple for you. Now, to the very, very important aspect of this conversation, your income tax obligation. Now, this one is an annual obligation, once in a year. VAT and withholding tax is monthly, but income tax filing obligation is once in a year. Now, if you are a company, as a company, you are either a company limited by shares, private company limited by shares, or a public company limited by shares, or an unlimited company, or a limited liability partnership. So, as a corporate entity, as a company, your obligation to file tax returns arises once in a year, and that is usually within 6 months after your financial year end. So let's say that as a business, you keep your account from January to December, let's say 2025. January to December 2025, that's when you close your books. December 31st, 2025 is when you closed your books. The law says you have to file your tax returns by 30th of June latest. That is 6 months after your year end with the NRS as a company. But if you're a new company, you have to file your returns within 18 months after your incorporation. Now, to file your income tax return, there are lots of things you need to do. For a company that is not a small company, that means if your turnover is more than 100 million, you need to prepare something called an audited financial statement that you then file with the government. And then you need to prepare your tax calculation, your capital allowance schedule, and a number of things. And that's what you submit to the NRS by latest 30th of June every year. Now, what is an audited financial statement? That is a record of your company that has been verified by an independent person called an auditor. So you have to get an external person, an accountant, who is an auditor to verify your business records. And that is when you can now call it an audited financial statement. And only large companies, that's companies that earn over 100 million, are required to get an auditor to inspect their books. If you're a small company, that means you earn less than between 100 million and less, you do not necessarily need to get an auditor to review your books. The law simply says you can prepare a statement of accounts, which means it's a simplified statement. You just need to show your total income, your expenses, your profits, your assets, your liabilities, your equity. Simple document. It's not something that requires an external party to review. Again, it might sound complicated because you need an accountant to do it, but TaxStream handles that for you. Remember, we handle your accounting, so we also help you prepare your statement of accounts, which you submit to the tax authority. And I have to mention, The obligation to file your tax returns with the government, with the NRS as a company, applies whether you are a small company or you are a big company. Now, even though as a small company, you are exempted from paying income tax, that means your income tax rate is 0%, right? It doesn't mean you will not file returns. You must file returns. And there are penalties for not filing returns. And the penalty is 100,000 naira for the first month you failed to file your return. That means if by June 2026 you've not filed your return, you already have a penalty of 100,000. And every other month that you stay without filing your return, you have another penalty of 50,000 every other year. And it keeps compounding. So take note, whether you are a small business owner or you're a medium-sized business owner or a large business owner, you have an obligation to file your tax returns with the NRS if you are a company once every year. It's mandatory. Now, if you are a business name, that means you're not a company. You are registered as a business name with the CAC. Your obligation also applies, but it's a bit different from companies. The way it works is, as a business name, you pay your tax to your state tax authority where you are resident. I will do a broader video around it. But if you are doing business in Lagos State as a business name, you need to file your tax returns with the Lagos State Internal Revenue Service. And the deadline for that one is 31st of March every year. So for your transaction, for all the sales you made between January 2026 and January 2025 and December 2025, you need to file those returns by 31st of March. And the way you calculate your tax as a business name is different from a company. A company calculates tax at 30% of their profits. As a business name, you don't have a fixed tax rate. Your tax rate, you pay tax as an individual because your business name is not separate from you. So the way you need to look at it is your business name is an extension of you. So it's like Kelechi Ibe trading under the name and style of tax stream, for instance, while your company is independent of you. So as a business name, you calculate your tax as if you, the business owner, is the one paying the tax. So you pay the tax as an individual. That means your tax is calculated based on the personal income tax band, which is, the first 800,000 naira is taxed at 0%. The next 2.2 million is taxed at 15%. The next 9 million is taxed at 21%. The next 13 million, I think, is taxed at 23%. I mean, I did a video, an extensive video on how to calculate your personal income tax. You can look out for that video on YouTube. So that's how you calculate your tax as a business name. And then you still need to file your returns with the state tax authority, Lagos State LIRS, if you're in Rivers State, Rivers Internal Revenue Service. Now, it might sound complicated, but the good thing is some of these tax authorities have built portals, e-filing portals where you can file. But again, it might still feel like it's a lot of work because you still need to calculate your tax and then prepare your books of account. Because even as a business name, you still need to prepare your books. It's not only companies that prepare books, business names also prepare their accounts. So if you're a small business, you prepare a small business account as well. And you need to file all of these things with the State Internal Revenue Service. It sounds like a lot of headache, but TaxStream has got you. So you see, I have been able to give you step by step what you need to do to get ready. And then the final thing that you need to know is that if you do not comply with your tax obligations and you do not file your tax returns and you do not pay your taxes as of when due, you will not be able to get something called a tax clearance certificate from the government. And a tax clearance certificate is a very important document for every business, whether you're a company or a business name. Very soon, you will not be able to do any transaction with the government. Any government agency you go to and you want to do some transaction or carry out some transactions, they will ask for your tax clearance certificate. And you will not get one if you're not filing your taxes. Some corporate entities will not deal with you if you don't have a tax clearance certificate as well. So you need to be aware of this risk and start to comply today. On a final note, I know that compliance can be cumbersome, complex, expensive, and that's why a lot of business owners have not been complying. And that's why we decided that at TaxStream, we're going to help every business owner comply with their tax obligation by making it very easy to prepare your accounts, to calculate your taxes on a monthly basis, to file your taxes, to pay your taxes, and to apply for your tax clearance certificate. So look out for more videos from us at TaxStream. You can visit our website at www.taxstream.com to get more information about what we can offer to you. See you next time. Thank you.